Welcome to my channel. What is mutual fund? Mutual funds are a type of investment vehicle that pools money from multiple investors to invest in a portfolio of stocks, bonds, and other securities. The funds are managed by professional portfolio managers who make investment decisions on behalf of the investors. When you buy shares in a mutual fund, you are effectively buying a small portion of the entire portfolio held by the fund. The fund's portfolio is typically diversified, which means that it holds a mix of different types of securities across different industries and sectors. This diversification helps to spread out the risk of investing in any single security. NAV. When you invest in a mutual fund, you are essentially buying shares in the fund. The price of each share is determined by the net asset value, NAV, of the fund. Investors use the NAV to determine the price of a mutual fund's shares. When an investor wants to buy shares in a mutual fund, they will typically pay the current NAV per share plus any applicable fees, such as a sales load. When an investor sells their shares in a mutual fund, they will receive the current NAV per share minus any applicable fees. In a mutual fund, the dividend and growth options refer to how the fund's returns are distributed to investors. Under the dividend option, the mutual fund pays out any dividends or interest earned by the fund's holdings to its shareholders on a regular basis, usually quarterly or annually. The dividend option may be more suitable for investors seeking regular income from their investments, such as retirees or those with short-term financial goals. Under the growth option, any dividends or interest earned by the fund's holding are reinvested in the fund, rather than paid out to shareholders. This allows the mutual fund to compound its returns over time, potentially resulting in higher long-term growth for investors. The growth option may be more appropriate for investors with a longer time horizon and a higher risk tolerance, as it allows for greater potential for long-term capital appreciation. When choosing between the dividend and growth options in a mutual fund, investors should consider their investment goals and risk tolerance. Entry and exit load are fees charged by mutual funds to investors who purchase or sell shares in the fund. This fee is typically a percentage of the amount invested and is used to cover the cost of distributing and marketing the fund. However, many mutual funds no longer charge entry loads, as they are viewed as a barrier to entry for investors. The purpose of an exit load is to discourage short-term trading in the fund and to help cover the costs associated with selling assets to meet redemption requests. The fee is typically a percentage of the value of the shares being sold, and it may decrease over time as the investor holds the shares for a longer period. Investing in mutual funds involves a certain level of risk, which can vary depending on the type of mutual fund and the securities held in the portfolio. So before investing, please read the documents very carefully. Thanks for watching. I love to hear your feedback in the comment section.